Hey guys, Eric Fitzgerald here. I just wanted to do a quick video. Now that the big beautiful bill has passed, I thought it was really important to cover some of the big impacts of the big beautiful bill. And yes, I am driving, but I'm in self-driving mode, so I'm driving myself. I did want to make a couple notes. There's a bunch of ways that you make money in real estate with real estate investing. And those four big ways obviously are that you're paying down, you're having tenants pay down your principal. You have appreciation, whether it's just through natural market appreciation. Like, you know, if all the houses in the neighborhood go up 50,000, yours is going to go up about 50,000. There's also in commercial forced appreciation, where you make the building operate more efficiently, either through additional income or reducing expenses. Then you also have cash flow. Cash flow is the one that everybody thinks about. You know, if I buy a building that costs me $1,000 a month and it only makes $1,200 a month, why would I do that? You know, I'm only making $200 a month, and I think that's very logical. That's the only one of these four that people ever think about as far as income. And it's the least powerful, and it's the only one anyone ever talks about, and that's why most people don't get into investing, is because they don't go deeper. So that's why I wanted to make this video. So the most powerful, in my opinion, way to make money with real estate is obviously, and the quickest, is through tax savings. If you're earning money through any other avenue, real estate can become an incredible tax strategy for you to keep more of what you earned over time. And I wanted to call out the big beautiful bill as notable in this discussion because it has massive tax benefits for investors in real estate. Most of these have been around for quite some time. They were in the Tax Cut and Jobs Act from Trump's first administration. A lot of those laws were either unclear and took some time to sort through, or they had sort of a time bomb to them, where they were that you could get 100% bonus depreciation year one, and then 80, and then 60, and then 40, and then 20, and they were about ready to expire. So one of the things in the big beautiful bill, and I'm not going to get into the politics here, it doesn't matter for this. This is purely about how you should be playing the tax game, and this is all 100% legal, and the government wants you to do it because they are incentivizing you to create affordable housing, to create jobs, to keep the revenue moving around. So we'll talk a little about that. But in the big beautiful bill, and I'm not a tax advisor, a lawyer, I'm not an accountant, so you know, I'm not your accountant, tax advisor, or lawyer. So take this for what it's worth. Definitely get advice. But there's a couple really powerful things in the new tax law. The biggest of which is bonus depreciation. And so, as we said, there's four ways to make money in real estate: cash flow, appreciation, principal pay down by your tenants, and the fourth is depreciation, which is a paper loss on your taxes. So that basically says that you know, your vehicle or your house is worth a certain percentage less every year over time from a tax perspective. That's not true. Real estate actually appreciates, but there's a tax function called depreciation that is a very, very powerful tool for real estate investors. And what bonus depreciation allows you to do is to break the building into its component parts. So instead of taking, like residential, the IRS says you can take 1/27th of the value of the property each year. You can write that off as a loss. When you take bonus depreciation, what you do is you actually do what's called a segregated depreciation study, or a cost segregation study, and you break the building into all its component parts. So you don't just say, I'll take the whole building at 27 years. You say, I'll take the wiring at 5, and this is all in IRS tax code if you know what you're doing. and a good accountant will. But you say, okay, the roof is on a 5-year schedule, the carpet's on a 5-year, the wiring's on a 7-year, the plumbing's on a 7-year, yada, yada, yada. When it's all said and done, you can expect to write off about 25%, so 20 to 30% of the building value should be able to be discovered in a cost segregation study. And what that does is move a lot of the component parts of the building onto a shorter than 27.5-year depreciation schedule. Then the next step is you take bonus depreciation that was approved in this new law, and what that allows you to do is move everything that's on a short-term, I think it's 10-year or less bonus or depreciation schedule. It lets you take it all in year 1. So what does that mean to you? What that means is on a $1 million building, let's say, let's call it $100,000, just for fun. So a $100,000 building, you would be able to discover about $20 to $30,000. So let's just call it $25,000 in depreciable assets for year 1. And what that means is, like, if you take a loan, which most people do, use leverage to buy that property, even though you've only put in 20 or 25% of the cost of that building, you can actually write off, again, like 20 or 25% of the value of that building. And so if you do it right, you can get a large portion of your investment in that rental property back in the form of tax savings. It only works if you have other income. So this isn't a strategy if you want to just live off your real estate, right? That's already inherently tax advantaged. You can still do it. There's still some stuff here, but where it gets really interesting would be if you are able to also use this to offset some of your tax liabilities on other income. So anyway, a lot to talk about. Please DM me or text me or call me. If we're beyond Facebook friends, please let me know if you want to hear more. I'm happy to talk through with you. And again, I can refer you to accountants and lawyers and all kinds of folks that do this for a living. I will tell you, it is pennies on the dollar to get a professional to do this for you. And there's a reason the rich get rich and they all have a lawyer and an accountant. It's because they understand it's a good investment. So I'd be happy to send you to some of my friends that have helped teach me on this, help talk you through the story and what this is all about. So DM me, text me, email me, whatever. If I can help you use real estate as a tax savings and take advantage of the wonderful renewed parts of the big, beautiful bill. There's some other stuff I won't get into in this video that is also super powerful. If just in general, if you're a business owner, whether it's real estate or anything else, the new tax law has massive depreciation advantages for you. And the purpose of that is they want to see real estate changing hands so more people can get involved. They want to see businesses buying hard, depreciable assets. So if you own a construction company, they're basically trying to incent you through tax incentives to buy a new tractor, buy a new truck, any kind of business that is capital intensive. They want you to go spend money in the U.S. economy. So it'll be very interesting to see how it works. I know as a real estate investor, if you're not doing these strategies, or if you have other income that you want to use real estate to help you with, you've got to be making yourself aware of these strategies. They are so powerful. Like I say, in my opinion, at least in our situation, the tax benefits have been probably the single most impactful part of the 4 ways that you make money on real estate. So thanks so much. Exciting times for investors. Lots of challenges, gotta keep moving. But this should help a lot to reinvigorate the trading, the buying and selling of real estate. And I'm looking forward to it. Lots of tough stuff to figure out, but this is a bright spot. All right, thanks, friends.